You know that satisfying moment when you open Zillow, type in your address, and instead of wincing at the mortgage balance, you actually feel a little rush of excitement? Like when you realize you're not just paying rent to a bank anymore, you're actually building something. There's a specific equity number where this shift happens, and it's not what most real estate gurus tell you. Most experts will say you need to own your home outright to feel wealthy, or that real estate only pays off after 30 years of grinding. But here's the thing they're completely missing. There's a much smaller milestone that fundamentally transforms your relationship with property and money. And once you cross it, the entire game changes. That number is $100,000 in equity. My name is Max, and I spend way too much time analyzing real estate wealth patterns and why some homeowners turn one property into generational wealth while others stay stuck in the same house forever. If you want to understand how property really builds wealth, hit subscribe and smash that like button if this video helps you see your home differently. Now, before we dive into why 100K in equity is the real game changer, let me ask you something. When you think about building wealth through real estate, what comes to mind? Maybe you picture some investor with 47 rental properties who got lucky with family money. Or perhaps you imagine someone house hacking in a duplex, barely scraping by while hoping the market doesn't crash. The truth is, real estate wealth doesn't work the way most people think it does. Here's what actually happens. There are certain equity thresholds that act like invisible barriers in real estate. Once you cross them, the rules of the game completely change. $100,000 in home equity is the first major threshold that separates homeowners who will build serious multi-generational wealth from those who will spend decades making payments without ever really getting ahead. And the crazy part? Most homeowners have no idea this threshold even exists. They're sitting in their homes, making payments every month, watching their equity slowly tick up, and they have no clue that everything is about to shift once they hit this magic number. Banks start treating you differently. Opportunities that were invisible suddenly become obvious, and your entire psychology around money and risk transforms almost overnight. Think about it this way. If you've ever tried to get a heavy flywheel spinning, you know that the first few rotations are brutal. You're pushing with everything you've got, barely seeing any movement, wondering if this thing will ever build momentum. But once it starts spinning, something magical happens. Each push becomes easier, and eventually the flywheel is generating its own momentum. 100K in equity is that moment when your real estate flywheel finally catches. Everything before this point feels like you're pushing against resistance. Everything after feels like momentum is pulling you forward. But here's where it gets really interesting, and this is something that will probably surprise you. The difference isn't just about having more money trapped in your walls. It's not simply that your net worth looks better on paper. The real magic happens in your brain. When you have little or no equity, your brain operates in what I call house poor mode. Every financial decision is filtered through anxiety and limitation. You bought the house, congratulations. But now you're terrified of anything going wrong. The furnace makes a weird noise and your stomach drops. Property taxes go up and you're recalculating your entire budget. You can't even think about investing in improvements because every dollar is already spoken for. This isn't just about being cautious or responsible. When you're in house poor mode, your brain literally cannot think about using your property as a wealth-building tool. It's like trying to plan an expansion when you're worried about keeping the lights on. Your mental bandwidth is completely consumed by monthly payments and maintenance emergencies. But something remarkable happens when you cross that $100,000 equity threshold. Suddenly, your brain has permission to think differently. Instead of asking, "How do I survive this mortgage?" you start asking, "How can I leverage this equity?" Instead of seeing your home as a money pit that needs constant feeding, you start seeing it as an asset that's working for you while you sleep. The shift from defense to offense changes everything about how you approach real estate. And this isn't just psychological fluff. The Federal Reserve's Survey of Consumer Finances shows that the median homeowner has a net worth of $396,000, compared to just $10,400 for renters. That's not a typo. Homeowners are worth nearly 40 times more than renters on average. But here's what's even more revealing. Homeowners who've crossed the $100,000 equity mark show dramatically different financial behaviors than those below it. They're more likely to have retirement accounts, more likely to own investment properties, and more likely to start businesses. 100K seems to be the psychological permission slip that unlocks an entirely different relationship with wealth and risk. When you've got that kind of equity backing you up, your brain stops operating from scarcity and starts operating from abundance. And that mental shift is worth way more than the dollars themselves. Here's where the math starts getting really exciting. Let's say you bought a $400,000 home with 10% down, so you started with $40,000 in equity. You're paying down principal every month, and let's assume modest 4% annual appreciation. Nothing crazy, just normal market growth. Getting to your first $100,000 in equity takes roughly 5 to 7 years of consistent payments and appreciation working together. That's years of discipline, of choosing this house over vacations, of watching that equity bar slowly creep up on your mortgage statement. It feels slow, painfully slow. And honestly, most people mentally check out somewhere along the way. They stop paying attention to their equity because the progress feels invisible. But here's the part that will blow your mind. Your second 100K in equity, it doesn't take another 5 to 7 years. It often happens in just 3 to 4 years. Why? Because now you've got more principal being paid down each month as your amortization shifts, and that appreciation is calculated on a higher base value. Think about this for a second. Your home appreciating 4% when it's worth $400K adds $16,000 in equity. But when your home is worth $500K, that same 4% adds $20,000. You didn't do anything differently. You didn't work harder. You didn't make extra payments. The math just started working in your favor because you had more equity generating its own growth. And here's where it gets almost comical. Once you're sitting on $200K in equity, your next $100K can happen in just 2 to 3 years through appreciation alone without making a single extra payment. The same milestone that took you half a decade initially is now happening almost automatically. That first 100K feels impossible, but every 100K after that gets progressively easier. But here's the part that most people completely miss, and it might be the most important point in this entire video. When you build 100K in equity, you've actually accomplished something far more valuable than just accumulating wealth on paper. You've fundamentally changed who you are as a financial person. And this might sound like some self-help nonsense, but stick with me because this is where things get really practical. Think about what it actually takes to build $100,000 in home equity. Unless you got incredibly lucky with timing or inherited property, this required serious commitment. You had to qualify for the mortgage in the first place. You had to make those payments month after month, even when it was tight. You had to resist the urge to cash out and blow it on lifestyle upgrades. You had to play the long game when everyone around you was chasing short-term gratification. And here's the kicker. You proved to yourself that you can build real wealth through assets, not just income. You became the type of person who owns appreciating property instead of just consuming. That's not just a financial milestone, that's an identity shift. And that identity follows you into every financial decision you make going forward. But there's another shift that happens at this level that most people don't talk about. You start seeing opportunities instead of just obligations. When you have minimal equity, every home-related expense feels like a disaster. The roof needs repairs, that's $8,000 you don't have. The kitchen is outdated, too bad, you're stuck with it. Property taxes increase, time to stress about the budget again. These aren't opportunities, they're emergencies that derail your entire financial month. But when you have 100K in equity, these same situations transform completely. The roof needs repairs? Annoying, but you could tap a small HELOC if needed, and honestly, a new roof adds value anyway. The kitchen is outdated? Now you're calculating whether a 30K renovation could add 50K in value. That's a potential 20K profit, not an expense. Property taxes went up? Your home value went up too. That's a good problem. Even better, you start noticing opportunities that were always there, but you couldn't access before. A duplex comes on the market in a great neighborhood. Before, you would have scrolled past it thinking, must be nice. Now you can actually run the numbers on pulling 80K from your HELOC for a down payment. Your neighbor mentions they're thinking of selling. Before, that was just neighborhood gossip. Now you're wondering if you could make an off-market offer and add a rental to your portfolio. This is what real estate investors mean when they say equity breeds equity. It's not magic, it's math plus access plus psychology all working together. Now let's talk about what makes real estate truly different from other forms of wealth building, because this is where 100K in equity becomes absolutely powerful. When you have 100K sitting in a stock portfolio, you can look at it, maybe sell some and pay capital gains taxes. That's about it. But when you have 100K in home equity, you can leverage it into $400,000 or more in additional real estate without selling anything or triggering any taxes. Here's how the math works. You pull $80,000 from a HELOC at maybe 8% interest. You use that as a 20% down payment on a $400,000 rental property. Now you control $400K in real estate that's appreciating, you've got tenants paying down the mortgage, and you still own your original home with $20K in equity remaining as a buffer. Let's say both properties appreciate just 4% annually. That's $32,000 per year in equity growth across your portfolio from a single strategic move. The interest on your 80K HELOC is around $6,400 per year. You're netting $25,000 plus in annual equity growth. Banks will literally hand you money to buy more assets once you've proven you can build equity. That's the leverage game, and it only unlocks after you cross that 100K threshold. Here's where things get really interesting beyond just real estate. Having 100K in equity doesn't just change your relationship with property, it changes your relationship with everything, especially your career. When you're renting or barely above water on your mortgage, you're essentially trapped. Your boss could be terrible, your commute could be soul-crushing, but you can't take risks because you need that paycheck to keep the housing situation stable. You're negotiating from fear. But 100K in equity changes the entire dynamic. Suddenly, you have what I call foundation money. You're not going to be homeless if something goes wrong. You could tap equity in an emergency. You could even sell and walk away with a serious chunk of cash if you absolutely had to. This psychological security affects everything about how you show up. You negotiate harder for raises because you're not desperate. You consider starting that side business because you have a backup plan. You take the career risk that could double your income because failure doesn't mean losing your home. Here's what's crazy. Often, you never actually touch the equity. Just knowing it's there changes your entire demeanor, your risk tolerance, your confidence. It's like having a secret weapon you hope you never need to use. But here's where most people mess this up, and I see it constantly. They hit 100K in equity, feel that psychological shift, and then immediately do something stupid with it. Maybe they decide they deserve a kitchen renovation that doesn't add any real value, just nicer countertops because they've earned it. Or they take out a HELOC to buy a boat, a car, or fund a lifestyle upgrade that has zero return on investment. Or worse, they cash out refinance to pay off credit cards, essentially converting unsecured debt into debt that's now secured by their home. Don't do this. That 100K in equity is not a reward for good behavior. It's not your personal ATM. It's the foundation of your entire real estate wealth-building future. It's the seed capital that can grow into multiple properties, passive income streams, and genuine financial freedom. If you're patient enough to deploy it strategically instead of consuming it. Here's a rule that will serve you well. Never pull equity for anything that doesn't either make you money or significantly increase your home's value. Vacations don't count. Cars don't count. Debt consolidation is just rearranging deck chairs on the Titanic. Protect that equity like your financial future depends on it, because it literally does. And this will probably make you laugh or cry depending on your current situation. Let me show you two people who both started with 100K in equity 10 years ago. Person A decided to enjoy life and pulled 60K out through a cash-out refinance. Bought a $45,000 truck, took a couple nice vacations, renovated the bathroom. Felt great for about 6 months. That truck is now worth maybe $12,000. The vacations are Instagram memories, and the bathroom, well, it's just a bathroom. Person B kept that equity intact and waited for the right opportunity. Used 80K as a down payment on a $400,000 rental property. 10 years later, that rental has generated roughly $120,000 in cash flow, appreciated to $580,000, and the mortgage has been paid down by another $60,000. Person B's net worth from that single decision, over $400,000 ahead of Person A. Same starting point, same 100K in equity, radically different outcomes. And here's the beautiful irony. Person A is still stressed about money and wondering why they can't get ahead. Person B is shopping for property number 3 and sleeping like a baby. The truck didn't make Person A wealthy. It made them feel wealthy while actually keeping them stuck. This is where having 100K in equity completely transforms how you think about every major financial decision. Instead of asking, "Can I afford this?" you start asking, "What is this really costing me in terms of opportunity?" That $40,000 kitchen renovation isn't just $40,000. It's a potential down payment on a rental property that could generate $500 per month in cash flow for the next 30 years. That's $180,000 in lifetime income you're trading for granite countertops. Suddenly, the calculus changes on everything. You stop thinking in terms of monthly payments and start thinking in terms of opportunity cost. What could this equity become if I deployed it strategically instead of consuming it? This isn't about becoming a miser who never enjoys anything. It's about becoming intentional with your biggest asset instead of letting it slowly leak away on things that don't compound. When you have 100K in equity and understand leverage, you see every dollar through an entirely different lens. Look, $100,000 in home equity isn't going to make you a real estate mogul overnight, but it will fundamentally change how you think about property, leverage, and opportunity. It's the difference between being a homeowner and being an investor, between making payments and building wealth, between hoping things work out and actually designing your financial future. Remember that feeling I mentioned at the beginning, checking Zillow and actually smiling? That's just the start. Because once you cross that 100K threshold, you stop being someone who owns a house and start being someone who builds empires with real estate. Start protecting and growing that equity today. Your future self, the one with multiple properties and passive income streams, is counting on the decisions you make right now. Trust me, they'll thank you for it.